Well, good evening again, everybody, and welcome back to Long Dong Personal Truck Stop. In this video, we're going to cover the earnings of two of my favorite companies of all time, Carvana, my Nirvana, and Oatly, my Deep Throatly. Yes. Why are we covering Oatly? Well, there's a certain man that I recall whose name begins with J and whose last name begins with L. You want to guess who that is?
Oh, merry stock market. Oh, man. Woo!
Anyway, Jeremy was a big fan of Oatly, my Goatly. So I like to track the stock. So let's dive into the earnings. We're going to start with Carvana, my Nirvana. So this is like the comeback story of the century. This company was absolutely cooked. I thought it was going bankrupt. This mother effer was flying high at like 360 back in 2021. The cloud market bubble popped and the stock went down to like $4. Okay, this thing was done, son. The used car market absolutely imploded. It was a huge bubble back in 2021. Ask me how I know. Oh, wait, because I bought a car back then because of a nag. Anyway, stock imploded, and then they had this miraculous, like utterly breathtaking recovery. It's up, what, 72% on the year, 74% year to date. I mean, going from 4 all the way up to 370. That's an insane return. Okay. Should have bought the dip, bro. Anyway, stock is down 2.28% on the day and 8.18% in the after hours, but not much of a loss considering the prior returns. Let's see what happened. Carvana announces record third quarter 2025 results. Are we sharing? Okay, we're sharing. Record 156,000 retail units drive industry-leading 44% year-over-year growth. Record 5.65 billion revenue, up 55% year-over-year. So they drove deliveries, and they're able to make more money from the growth. So basically, they're growing revenues faster than deliveries. That's good. Industry-leading, what industry? Grift industry. Industry-leading net income, so they're profitable, of $263 million. Up 115 million year over year, and record adjusted earnings before interest, taxes, depreciation, and amortization of 637 million. For Q4, Carvana expects retail units sold over 150K. For the full year, Carvana expects adjusted EBITDA at or above the high end of previous 2 to 2.2 billion range. So it looks like they raised profit guidance, adjusted EBITDA guidance, at least. Okay. So Carvana, you go on the website and you get a used freaking car. Okay. Let's see what the CEO had to say. In Q3, Carvana once again drove industry-leading growth while crossing over 20 billion revenue run rate scale for the first time. We continue to focus on unlocking the structural advantages of our vertically integrated model that strengthen our business and separate our customer offering. This effort has already driven new milestones in speed, selection, convenience, and efficiency. All right, so we already covered all the freaking profitability metrics. GAAP operating income of $552 million with an operating margin of 9.8%. Let's go look at like prior margins. That's pretty decent margins. That's better margins than freaking Tesla. Think about that. Carvana has better margins than Tesla. What a freaking joke. Yeah, I mean, they weren't even making money. Like all the way back in 2021, 22, they weren't making hot freaking crap. Okay. And now this has been a miraculous recovery. I'll give them that. I mean, their margins have been going up and they've been delivering. Okay. So last quarter they had 10.6% margins and they had 9.8%. They're doing pretty well. All right, we already got their guidance. Let's see. Let's go look at their. What the hell is this? Let's go look at what is this? Okay, I expect to see an income statement, a statement of cash flows and a balance sheet. What is this? So what this is showing us is different line items on the income statement. We know their net income was $263 million for the 3 months ended September 30th, 2025. Interest expense is actually down. Their interest expense dropped from $157 million to $125 million. Other expenses, however, are up. What is that? And loss on extinguishment of debt. So debt. So we can see interest expenses going down. So they're paying off debt, it looks like. All right. What other expenses do we have on here? Share-based comp, nothing crazy. Total revenues, huge growth in revenues. I mean, they're doing pretty freaking good. Okay. They have more profits than Tesla. Let's go look at their valuation. Let's see. Okay, they got a $77 billion market cap on trailing net income of $563 million. They have a PE ratio of 88 and a forward PE of 70. I mean, if they're growing that fast, I guess maybe that's justified. Maybe. And even the analysts have a price target of $414.68. I mean, this has been a pretty impressive recovery. I'll freaking give it to them, okay? Let's look at revenues. Yeah, look at this. They got their cheeks clapped. They almost collapsed, and now they're just cooking revenue like never before. Okay, obviously shares are going up, but they needed to survive. Earnings per share is finally freaking positive. Still not much free cash flow. Let's see, margins. Yeah, look at their gross margin, man. They're really making money on these freaking cars. Woo! I'm so glad I don't have to buy a car right now. God, I'm so glad I don't have to buy a car right now. So, very impressive. We'll see if they can keep it up. But so far, they've been doing pretty freaking good. So that's Carvana. I mean, they didn't really have much on the earnings slides. It was kind of lame, to be honest. I like to see financial statements, but I guess that's too much to freaking ask. Let's see. All right, let's do the more exciting one, Oatly. So, of course, we got Jeremy stock, Oatly, my deep throatly. $15. Did they do a reverse split? Yeah, they definitely did a reverse split. God, look at this company. Should I buy the dip, bro? Yeah, it'll go up 100% from here, and you guys will think you're geniuses. All right, so it's down 3.4% on the day and 4.37% in the aftermarket. Let's go look at these stunning earnings. John Christoph Flatulence, Oatly's CEO, commented, I am proud to report that we drove profitable growth in the quarter. Oh, you're profitable, huh? With solid revenue growth and positive EBITDA. Wow. You guys are so amazing. Okay, let's look at revenue right here. So, European and international revenue is up 12%. North American revenue is down 10%. So most of their revenue is in Europe and overseas, obviously, excluding China. And then China itself, it's up 28%. Are they soyifying Europe and Greater China? Is this like a psyop by the CIA to make all of our international rivals soy boys? Because it seems to be working. I mean, they're not doing good in America, but they have had pretty impressive growth in China from a revenue standpoint, and in Europe. I mean, and their largest market is Europe. So they're doing pretty well from the revenue portion. Now, when it comes to volume, 32% increase in volume in China, 12% drop in America, and volume is up 8% in Europe and international. So they're doing good overseas, basically. Okay. Let's see. The highlights. Third quarter revenue of $222 million. Let's go look at their prior revenues. Okay, I mean, like, nice, slow, steady revenue growth. Very impressive. With a revenue increase of 3.8% compared to the prior year. Gross margin was 29.8%, which was flat compared to the prior year. Third quarter net loss attributable to shareholders was $65 million. Can we have a profit for one quarter? I thought you said profitability in your statement there, Mr. Flatulence. Net loss was $65 million. Have they ever had a profit? I highly doubt that. Good pick, Jeremy. Well, they had 1 quarter of profit. It's probably an accounting adjustment. All they do is just lose money. The company is reaffirming its 2025 outlook. Revenue growth is flat to 1%. Wow. Adjusted EBITDA is expected to be in the range of $5 to $15 million, and capital expenditures are expected to be approximately $20 million. And the company's strategic review of its Greater China business is ongoing. All right, what are they doing here? Subsequent to the quarter end, on October 3rd, the company completed its previously announced refinancing by using proceeds from the issuance of Nordic bonds to prepay the term loan B credit agreement, repurchase and cancel certain of its U.S. convertible notes, and replacing its existing revolving credit facility with a new super senior revolving credit. All right, so they're doing some debt refinancing transactions here. Okay. Freaking garbage. Let's go look at the financial statements. Come on. What's this? North America. What do they say about North America? The 12.8% volume decrease was primarily due to reduction in sales to the segment's largest food service customer. When I go to the store, there's like 5-6 different alternatives, and usually Oatly is the more expensive one. I sometimes I have oat milk. Well, usually I do because regular milk expires. I never choose Oatly. Number one, based on principle, because of Jeremy, and number two, it's just more expensive. I can save like $1. I get it for like $3.99 or something, and Oatly's always like $4 something. No. All right, Greater China. Let's see. Growth was driven by increased sales across both the food service and retail channels. Okay, China's doing well, I guess. Balance sheet and cash flows. They have cash and cash equivalents of $58.9 million and total outstanding debt of $507 million, consisting of convertible notes and liabilities. Net cash used in operating activities was $17 million for the 9 months ended September 30th. Compared to $104 million during the previous year. Oh, wow. They use a lot less cash from operations this year, but they're still burning cash. Horrible. And then they had capital expenditures of $13.8 million over the 9 months. So they burned. The free cash flow is like negative $30 million, $31 million. All right. What is this? What is the strategic review of China? That's like the main growth of your business. What are they pulling out of China? What are they doing in China? What a freaking piece of trash. This thing hasn't improved over like the last 5 years. Look at that. R&D. They cut R&D pretty significantly. Selling and admin expenses, $75 million. All of their gross profit is consumed by selling general and admin expenses. And then they have finance expenses of $47 million. They're cooked, dude. What is this? They're just getting exterminated. What is this finance expense? Maybe we'll go look at the statement of cash flows. Where's the statement of cash flows? Share-based comp, write-downs of inventories, or writing down their inventory. Finance income and expenses. What is that? Finance income. I wonder what they disclose about this. Finance income and expenses for the third quarter was an expense of $47 million, consisting primarily of a fair value losses on convertible notes. Okay, that's what the loss was. And net interest expenses of 15. They're paying $15 million in interest. So they had losses on their convertible notes, probably because their freaking stock is collapsing, and they spent $15 million in interest. They're cooked. What a piece of garbage. Good pick, Jeremy. All right, let's do some comments. We're going to close this out. All right. Oh, what do we have? One member comment here. What a bunch of garbage companies. Yeah, the Oracle of Las Vegas bought this one. What a freaking genius. Well, that's the only member comment. Well, everybody, I guess that's it. Like, subscribe. Consider joining as a member to support the channel. Also, consider liking my Facebook page, SMPF. Also, consider following my X account. If I ever get deleted off YouTube, you never freaking know. At least I'll be on other platforms. So go cross-like all those accounts on Facebook, on X. Follow me everywhere. Like, subscribe to my YouTube channel. Join as a member. Also, consider booking a free 30-minute tax consultation with me. I am a certified public accountant and would gladly do your business and or personal taxes any state in the United States. You can talk to me for free. I give you upfront fixed quotes for your tax preparation, and I'll do your taxes like a boss. Have a wonderful, delicious evening.